We're continuing our new topic here at the Coerman Business School. This month, the focus is tax. In the previous episode, we looked at tax from the personal perspective, how individuals experience it in daily life. Today, we shift angle, because businesses don't experience tax the same way individuals do. For a business, tax is not just something that happens automatically, it's something that must be understood, managed, and planned for. In this episode, we're looking at tax from the business perspective. No tricks, no loopholes, no moral discussion. Just how businesses actually think about tax and why that thinking is fundamentally different from how individuals experience it. So what is tax to a business? For a business, tax is not an emotion, it's a variable. Businesses don't see tax as something that disappears from their salary. They see it as something calculated after activity happens. Individuals are taxed first, then they live on what remains. Businesses operate first, then tax is calculated on what's left. In simple terms, a business earns revenue, and from that revenue it pays costs. What remains is profit. And tax is applied to that profit, not to the total money that came in. That means businesses interact with tax after decisions are made, not before. This alone changes the entire relationship. One of the biggest misunderstandings people have about business tax is confusing revenue, profit, and cash. A company can have high revenue and still struggle. A company can show profit on paper and still run out of cash. Tax sits on top of this complexity. Some expenses reduce taxable profit immediately. Some are spread over time. Some affect cash but not profit. This is why businesses focus so heavily on planning, not avoidance. Because timing matters, structure matters, and understanding the rules matters. Businesses don't pay tax once a year and forget about it. They interact with tax continuously. And they do it through payroll taxes, VAT collection and remittance, corporate income tax, local and international compliance. And a business often acts as a tax intermediary. It collects VAT on behalf of the state, it withholds income tax for employees, and it reports transactions regularly. In that sense, businesses are part of the tax system itself. And this is why governments place responsibility on businesses, because they are easier to monitor than individuals. For a business owner, this means tax isn't passive, it's operational. Miss a filing deadline and penalties apply. Misunderstand the rules and risk increases. So businesses don't just think about how much tax they pay, they think about compliance, predictability, and continuity. There's a reason businesses often feel less tax pressure than individuals, even when they pay more in absolute terms. First, businesses have flexibility. They can choose when to invest. They can decide how to structure operations. They can plan expenses. Second, businesses see tax as part of strategy, not identity. Individuals often link tax to fairness or personal effort. Businesses link tax to sustainability and growth. Third, businesses are taxed on outcomes, not effort. No profit means no corporate tax. Profit means contribution. And this creates a different psychological relationship. Tax becomes something to manage, not something to fear. So from a business perspective, tax is closely tied to structure. Where the company is registered, how activities are split, how assets are held. And these are not tricks, these are design choices within legal frameworks. Businesses plan tax the same way they plan supply chains or logistics, to reduce uncertainty. Because uncertainty is the real enemy. A predictable tax environment allows businesses to forecast cash flow, plan hiring, invest long-term, while an unpredictable tax environment causes hesitation, delays, and capital flight. That's why businesses value clarity more than low tax rates. Stability beats generosity. So what should entrepreneurs take from all this? Well, first, tax is not personal in business, it's structural. Second, tax planning starts with understanding your numbers, not chasing optimization. Third, businesses that survive long-term treat tax as part of governance, not as an afterthought. Finally, the goal isn't to eliminate tax, it's to operate sustainable within the system you're part of. When businesses respect that balance, tax becomes manageable instead of overwhelming. Because tax isn't just economic, it's ideological. Thanks for watching. My name is Remco Coerman and this is the Coerman class, Finance and Business School, sponsored by Epic Edges. See you in the next episode.